Hello and welcome to a brand new show of Market Makers. My guest on the show today is someone who truly believes in the benefit of long-term investing. He has always maintained that price is what you pay, value is what you get. And he believes what Albert Einstein once flagged off, that the most powerful invention by mankind is the power of compounding. Milind Karmarkar, Head of Research of Dalal Broacha. Mr. Karmarkar, good to have you back on ET Now.
Good to be here again.
Are you a bit worried with how things are moving? Rupee has plunged, economic growth is not back, foreign institutional investors have started selling, and the general environment is not very conducive for private sector capex.
Well, it is true. Whatever you have said just now is absolutely true. There are problems. Economy is not growing. Foreign investors are pulling out. In general, there is a despondency amongst manufacturers to put in additional capex. But this is not the first time it has happened. Time and again, these things come and the cycle reverses. And I think that we are probably at the bottom of the cycle. And things are going to reverse. Not that because I am an optimist, but at least history has shown me that these things never last for a very long period of time. So I think we are probably at the end of this cycle and things should start improving.
Why is the currency market telling me a different story? Equity markets haven't broken down, but here we have a situation where our currency has plunged to a new historic low.
See, I'm not an expert, I'm not an economist, neither am I a currency expert. And sometimes these things do perplex me as well. Like Japan has a debt to GDP of about 2.5–3 3 times, and we have about, say, 80–90%. And there are many other countries who have a debt to GDP at a significantly higher level. Despite that, their currencies have not fallen as much as our currency. So it looks like that it has to do with some short-term problems in the economy, like the high current account deficit which we have, and probably a short-term pullout by the FIs, like what happened sometime back in the debt market. That could be one of the reasons why the currency has plunged so much. Again, I was looking at some data, let's say about in last 8 years. Every year we had a volatility of anywhere between 8 and 25%. So this time, so far, it has not broken that barrier. And I think things will improve as we see government also taking enough measures to sort of bridge the current account deficit or reduce the current account deficit. And RBI also working on it. I think as the current account deficit starts going down, we will see the rupee improving. So I'm not so much worried about that. Yes, in the short term, it could be a worry. But if someone says that one expects the rupee to go to 70 rupees to a dollar, I wouldn't support that. I think we have already seen the bottom and things could start improving there as well.
But the problem is growth, and ultimately markets are a function of earnings. When do you think earnings will bottom out?
I think we are about 9 months away from that still, because I do expect the economy to very clearly bottom out somewhere towards the second quarter of this year. And hopefully, as we are seeing, at least initial stages, the monsoon has been good, because all said and done, a good monsoon definitely is very good for the economy. So I do see the economy bottoming out somewhere after the second quarter. And probably that's when you will also see a very slow but steady growth coming into the economy.
Do you worry about India's dependence on global liquidity? Because it's like a one-trick pony. The day we get money, we go up. The day we get outflows, we go down.
That is true, because India is, I mean, the overall stock markets are dependent significantly on the inflow and outflow of money into India. But having said that, I completely concur with some of the senior fund managers out of India who have said that, ultimately money will come into places where growth is going to be in the longer term.
But 8 has become 4, so we are not growing. We are slowing down.
I agree with you that 8 has become 4. But if you look at state-wise growth, you have at least 5 to 6 states which are growing anywhere between 9 and 10%. It would be Maharashtra, you have Goa, you have Rajasthan, you have Bihar, you have MP, you have Chhattisgarh, maybe a few more. Now, if you see the population in these states, the total population of these states is equal to or slightly more than the population of United States. So if you have an economy, not of the size, but of a population of United States, which is growing close to double digit, what else you want? Others will also catch up. So yes, I agree with you that 8 has become 4, but 4 to become 8 is not going to take very long. One good year and I think we should be back.
So we may be discussing the big picture, and the big picture is looking slightly messy, slightly shaky.
True.
But the stocks you own and the sectors you like, consumer as a theme is doing exceptionally well, and some of the stocks you track, either they are at a new high or they're marching towards the new high. So you clearly feel that consumer is the way to going forward, or consumption is the way going forward?
Absolutely. I completely believe in that, and I think, I don't know whether we have discussed this earlier, but there is a very simple logic to it, that the Indian GDP over a longer period of time has grown significantly. Like in last 30 years, it's grown by about 60 times. Even in last 10 years, it has grown by about 4 times at current market prices. Now, stock market looks only at the current market prices or current sales. So if the economy itself or the GDP is growing at around 14%, there would be good companies which would be growing at a pace which is higher than this. And that is what has exactly happened. And I think that is what will continue to happen for a very long period of time. Because as of now, we are only at about, $1,500 per capita income. And there are many others, like, for example, Congo is 2 times ours. Turkey is, I think, 7 times. A country like Greece is 15 times our per capita income.
Which is in recession.
Yeah, which is in recession. And those are not the countries where people are ultimately going to invest. So where are they going to invest? They are going to invest in a country like India, where GDP growth at its lowest is 4%. And you have a per capita income which is likely to increase. So
Let me just challenge your thesis there.
All right.
Now, the per capita income could come down. Why? Because total subsidy is going to get knocked off. Consumers will have to pay more for their bills. Electricity bills are likely to go up. High inflation is going to eat into your, into your savings. And
Yes.
B, with no job creation, maybe there could be an issue for the economy.
See, Nikunj, the overall scenario which you have just now projected is a scenario which has happened in last 1 year. Now, typically I have seen in the last at least 30 years which I have seen, this type of scenario is there, but it doesn't last for more than 2-3 years. We are already completed 2 years, and I don't know what is going to be the trigger, but maybe an election, and after that a stable government coming to power. I don't know. I mean, but there would be some trigger which will come in, which in all probability will change all of this. So I agree with you that in the shorter term, these are definitely concerns. But for a country of the size of India, and which has been growing consistently, I don't see it as a major concern for the longer term. In the shorter term, I agree. There could be some issues which can come in maybe for next 1 year also. It's possible. I don't deny that.
It's rare, but you wear 2 caps. You're a fund manager as well as broker.
Right.
So what is the broker in you advising to your clients, and what is the fund manager in you doing?
Unfortunately, what happens is that as a broker, I continue to frankly advise what I preach, that invest for longer term. But the problem with me is that the clients don't accept it. So clients keep on, keep on trading, as you say. So client takes his money out. If a particular stock moves up by say 15%, he takes his money out and then gives me
the cash and get out.
Yeah, and then calls me and says, what next I do? And I don't have an answer to that. So yes, there is a dilemma there, but I would still suggest that in a country like economy, where long-term growth is still visible, I would suggest that buy and hold strategy definitely works significantly. It becomes difficult for people like me for simple reason that you need to come out with more and more ideas. Virtually an idea every month, or even that is not sufficient in many cases. But yes, that is how life is.
Mark Mobius last week made a very interesting comment, and his thoughts are that because of technology and because of communication, the buy and hold strategy may not work, because now you see a bear and a bull market cycle within a year.
No, I mean, he is a legend, so I can't counter him on that. My philosophy is or my logic is based on very simple this thing. that I am investing in a business. I am investing in a business which is in an economy which is growing at, let's say, 6%. I'm not even saying 8%. So a GDP is growing at 6%, and there is an inflation, whatever one says, the official figures may be 4%, but all of us know that inflation is anywhere between 6 and 7%. So 13% is the actual growth rate at current market prices. Add to that for a good company another 3-4%. So 16-17% growth for a good company is not difficult in the normal circumstances as well.
So buy these good companies and just stay put.
Absolutely.
So
Absolutely.
Where are you allocating capital? Let's talk names.
Okay. I mean, more or less, as I said, that the names remain same. It's companies like Bata, Britannia, Graha Finance, Mahindra & Mahindra Financial, Trent, Shoppers Stop. Recently, we have invested into Talwalkar's, then specialty restaurants. So it's predominantly finance, consumption, and pharmaceuticals. Biocon is something which we have invested.
So let's discuss some of your new ideas. We
All right.
discussed Trent and Tata Chemicals last time.
Yeah.
What makes you bullish on Mahindra & Mahindra Finance? The stock already has seen some degree of run-up.
Yes.
And expensive. If I look at the price to book,
it's about
trading at
2.8. Yeah, 2.8. Three times.
Yes.
3 times. That's right. Mahindra & Mahindra Financial Services basically has the strongest presence in rural India. And I think over a longer period of time, that is the sector, the rural sector will grow significantly because of increasing per capita income. So that is one aspect. Second is that they have 2 more legs to their business. One is the housing finance business, where they give loans at an average ticket size of less than 1 lakh rupees. And they have an insurance broking outfit as well. Now the housing finance business, they've gone on record saying they would be $1 billion company in next maybe 2 to 3 years. Currently, current size is 700 crores. Okay. The opportunity is huge there. For example, Graha Finance currently is at 7,000 crores. So Mahindra & Mahindra Financial, because of Mahindra & Mahindra offices, has got presence across India, and especially in rural India. And that is the reason why I think the growth could continue there, especially not only in vehicle loans, but especially in housing finance and, of course, insurance.
The company has aspirations to become a bank, and if they become a bank, then do you think all the regulatory problems could be an issue? A bank means that your current NBFC model would get challenged. You will have to comply with the SLR and the priority sector lending norms as well.
It is possible. I'm not saying, but I'm sure that company also understands this. The management also understands this, and they would do something to get over this. Maybe a separate listing of the housing finance business, which is possible.
So stock is at 250. So what is a good level to buy into this stock?
No, ideally, I mean, 3 times book is, as I said, it is not cheap. But then Graha Finance quotes at 6.5 times book. So as always, what I suggest people is that you buy something, hold on. If it comes down, in all probability, at least the valuation suggests that it should come down, buy some more.
So you're not a big fan of buying cheap stocks?
I would love to buy cheap stocks, but in India, I'm not the only one who looks at stocks. There are many more people who are more intelligent than me who are looking at these stocks. And they keep buying stocks. So that is the reason sometimes stocks are not as cheap as you would like them to. But despite this, so that is the reason the only sort of strategy which one could adopt is that you buy something, hold on. If it falls, you buy some more.
Do you have a price target for Mahindra Finance, or for that matter, Graha Finance?
I don't have price targets. I think I told you last time also. I don't have price targets, but I will hold these companies as long as they continue to grow at, say, 20-22% year on year.
Both profit and in terms of revenue?
Yes. Revenue could be slightly less, but in terms of profit, definitely.
Talwalkar's.
Yes.
Again, a new idea.
Yeah.
You like Talwalkar's. Why do you like this? Why do you like this kind of a model, which is largely a very Capex oriented model? Yeah,
many people have said that it's a Capex oriented model. But the thing is that, look at retail. No one says that retail is a Capex oriented model. Most of these, gymnasiums which are there are not owned by Talwalkars. They are on lease. So when you take things on lease, one thing is definite, that the ownership, the cost of ownership comes in your revenue expenses. So it doesn't become a so-called Capex oriented model. Having said that, their future plans are such that they would be adding more and more activity to the same gymnasium. Like there is a normal gymnasium. To that, they would add something called new form, which is a new sort of exercise. Or they could add something like a Zumba, which is a new form of exercise, or a yoga and things like that. So revenue per client could go up. So because of that, overall the return on capital employed and return on equity is also likely to go up in the longer term.
But if they have to expand more, they would dilute more, which means your return on equity could come under stress.
See, it is like this, that they already have sufficient capital with them for at least for next 2-3 years. My calculation suggests that after that, the kind of cash flows which they will generate out, because typically a gym starts generating cash flows after 3 years. So they are currently at 137 gyms. So once the cash flow starts coming out of these gyms, that cash flow would be sufficient for them to expand further. That is one. Second is that most of the new expansions they are doing through franchisee routes, where their Capex involvement or their additional involvement is their financial involvement is extremely low. So their focus is predominantly on management. And then that becomes an excellent model. Like it's like an asset-light model for a...
I was looking at Britannia Q4 numbers, and they've come out with absolutely stellar set of numbers. What's the story there? The operating profit margins have expanded from 4 to 8.
Yes.
Are they sustainable?
See, the margins in the fourth quarter surprised me also. The problem is, according to me, they are one time. So if one is buying looking at the fourth quarter margins, I don't think they will sustain. They will come to the fourth quarter levels over a longer period of time. I have not been able to talk to them, neither they have conducted an analyst meet, so I don't have the breakup of why these margins are high, but their salary costs have gone down significantly. So typically there could be a one-off item there. So that is why if one is looking at Britannia, one should not look at it only on the basis of the fourth quarter numbers. Having said that, Britannia has a fantastic model in terms of the segment which it is in, which is food, which is dairy. Their dairy business is doing phenomenally well, and I think in India dairy has a lot of scope to grow. Biscuits, I agree that at least the base level biscuits, which are glucose, they are not growing for them, and it's a base level or a kind of commodity business. But their value added products are doing extremely well, and I wouldn't be surprised if over a longer period of time, companies like Britannia, or even companies like Nestle would go into something which Indians love, which is namkeen. So I wouldn't be surprised in next 4-5 years, all these larger companies moving into that as well. But food as a category is likely to do exceedingly well, and I think looking at that company, one should focus on that rather than looking at a quarterly movement in the margin.
Do they have pricing power? What I'm trying to understand from you is that if commodity prices go up, does a company like Britannia have the muscle or the ability to pass on a price hike?
See, what they have done is that over a period, they are slowly shifting from commodity kind of biscuits to value-added biscuits. Like they have this sugar-free biscuits, they have oats biscuits, ragi biscuits, and many other kinds. Like even in Good Day, they have got some variants. Yeah, they are moving up the value chain. And because of that, passing of commodity prices becomes easy. But for this to have an impact may take another couple of years, because glucose even now forms a significant portion of their portfolio, and because of that you will not immediately see this reflecting in their results. So it will take time, but it's definitely happening.
In the previous bull market, which is in the bull market of 2003 to 2007 or 2008, Capex oriented stocks, they appreciated by 10 times to about 40 times. Voltas is a classic example. Do you think we could see a similar story panning out this time around for consumer names?
That is what I'm banking on. That is what I'm banking on. And I do believe that private consumption is what will drive the economy going forward. we see those changes already happening. I don't know whether it's good or bad, but today's newspapers also say that, we are becoming an EMI nation. I hope this doesn't exceed significantly. But having said that, yes, I am actually banking on not India becoming an EMI nation, but I am banking on increasing per capita income. So that is one thing which I am banking significantly on. And if you ask me, because I'm sure you'll ask me what can go wrong. So this is the only thing which can go wrong, that if we are unable to provide jobs to people who are coming of an age to take up jobs, then it is going to be tough. But I see that not happening, or let's see the probability of that happening extremely low. So that is the reason why I'm bullish on all this.
Let's revisit two stocks which we discussed last time, Trent and Tata Chemicals.
Okay.
There is some volatility in Tata Chemical numbers.
Yes.
Are you worried because of that?
There is a problem there. Problem in the sense that there one particular, let's see what is happening in Burnham business, which is in UK and Kenya. There is a demand reduction in Europe. Because of that, they are unable to sell at a price which they would like to. As far as UK operations are concerned, they have certain technical problems in Magadi which they have not been able to circumvent. Probably this is likely to continue for some more time, according to me. So that is the reason why that business is not generating the kind of cash which I had expected. That has impacted their results for this quarter.
But the Pulses business is growing.
Pulses business is growing, though as of now it's extremely small. So it will take some more time before it really catches up. But that business is growing, and they are putting their efforts to see to it that the business grows. I think they have added some more products to that as well, like basin and a couple of other things also. So I think that business has got a great future. In terms of their fertilizer business in India, they could be impacted this year because of reduction in subsidies, and also because of not getting subsidy in time. So these two things impact the fertilizer business. Soda ash business in India is doing very well. Soda ash business in US is doing very well. So overall, they are still generating cash in their commodity business. But the kind of cash which I had expected, they have not been able to generate this quarter.
What about Trent? Expensive stock, but they're growing. I looked at the numbers, growth is intact, a couple of their formats are doing well.
Yes.
And the partnership with Zara has worked like a charm for them.
Yeah. Westside and Zara are doing exceedingly well. Westside top line has grown by about 14%. Westside bottom line has grown by 31%. As you rightly said, Zara is also doing exceedingly well. They are going slow on Star Bazaar. The reason is that...
Which is good or bad?
I would say it is good because they are not expanding crazily. They have realized that they need to have certain changes in the format, like overall, actually, leave aside trend, but overall I think in India people have realized, or people in the sense the people who manage these businesses have realized that a hypermarket in India is not necessarily required to be 100,000 square feet plus. They would rather have it at 30,000 square feet or lower size, and that works fine. So I think there will be some time where many of these stores will adjust to that. They may let go some properties and then probably reconstruct the entire business, but that business will deliver over a longer period of time. We have seen, of course, there are companies like DMart which are not listed, but they have followed that model and I hear doing exceedingly well. So that model has no issues, that segment has no issues, but yes, there needs to be some restructuring with both Shoppers Stop as well as Trent are getting into, and I think they will do well going forward.
Before we wrap, final comment on allocation. We've discussed about 6 stocks.
Yeah.
Should one allocate equally in all the stocks?
I would put as of now slightly less allocation towards Tata Chemicals, because it may require some more time to sort of get together its act in Magadi. But having said that, all other stocks, I think equal allocation is excellent. I think that is the best thing which works.
About 10 to 12% in other stocks.
Yes, that's right.
Final question. What are 2 fundamental factors which are making you nervous?
Fear of uncertainty at the center. That is something, because that basically pushes further your recovery. If there is a government after the election, there is government at the center which doesn't have clear majority, then we could have some problems. But I mean, that is one of the major things. The second is that a sudden pullout by foreign institutional investors. I don't think that will happen, but yes, this is the other worry which I have. In the shorter term, again, longer term, I have no issues.
All right, brilliant. Lovely to have you back on the show. Thank you so much.
Nice meeting you. Nice meeting you.